Hi, my name's Jahna and I have been in business close to 10 plus years. Being in business can be challenging at times when it comes to cash flow. I have never been someone that has been able to work within a budget. I think budgets for me were always something that felt limiting and that were the unknown. So I have often made my own spreadsheets to help me understand my numbers so that I can make longer form decisions. Initially, when I used to do this many, many years ago, was when I owned a business that was very seasonal in its income. So the income came 9 months of the year, and the expenses obviously went for 12 months of the year. So the budgeting was really important. Back then, there weren't resources available or as much around the internet and learning. Now we have amazing books like Barefoot Investor, Profit First, the Ramsey program. All of that information is readily available on the internet. Back then, I used to project my monthly cash flow. So I would have my revenue or my income in each particular month, and I would also have my actual. So I would record those expenses. Fast forward nearly 20 years, I've adapted that to make it a bit more simpler, just so that it's easy for me to understand. So this is a spreadsheet that I use all of the time. I have it set and forget in what I do in my business, and I am updating it probably weekly. I'm referring back to it. So if you're familiar with any sort of bucketing process, I guess you'd call it. So if you're a Barefoot Investor, Profit First, all that sort of stuff, this is why there's percentages up here. Not overly necessary, but this is something that I definitely use. So what I generally do is I would write what I'm actually going to get. So let's start with income. So bookkeeping agreements. So monthly, I've got returning revenue from clients who are on fixed price agreements. So that means it doesn't change. It goes out every month. Let's just, for argument's sake, say it's $12,343 a month. I probably get about $55 worth of affiliate commissions. That's not much. I actually don't earn any interest. So this is all in my business. Or this is an example of being all in a business. So this figure for me, I have got it as inclusive of GST, because I also want to know what's going on with my GST. If you're not registered for GST, that's less of an issue. So from there, I put all of my income actual. So my actual income, what it does is it annualizes it for you. So it gets an annual figure of basically what you are going to earn. If I do consulting, for example, I might just do a one-off consulting day, and say I get one of those a fortnight, and let's just say it's $275. One of my services on my website is $275, so that's the easiest way. I put $275 in there as an estimate. I'm aware that that's not guaranteed, so I don't overestimate. I rather underestimate, because I really want to know what's happening in the business to cover costs, not those stretch targets. When I have those stretch targets, that's when I put them in, because I can sort of adjust and project what sort of revenue I'm going to have for that year. So we'll take that out for now. I then have separated into different areas. Some of these are actual expenses, some are not. So we'll move through. So I've got a yearly allocation for my accounting fees. Obviously, being a bookkeeper, I have quite low accounting fees. So I only do that once a year. I think last time it was 2010. I was a member of Rotary for a period of time, so I've got that in there. I've got my ATSIC fee, which I think that's actually increased to $321. That's a year. So then I've got things like Adobe, professional indemnity insurance. Now, some of these figures aren't accurate. They are just made up in a template. The key is I don't put estimates in. I put actuals, and I put each subscription. Reason being is because subscriptions are often the thing that get away from you. They are often the thing that you can, pay up front to get 40% off and that sort of thing. So I have got all of these different types of subscriptions in here that have previously been held, or I've used it for something else. So I've got, like I was saying, subscriptions, then any memberships, any sort of other expenses that you might have for your website. I'm just deleting things that I don't have anymore whilst I do this. Trend Micro, which is security software. I've got my mobile phone, Xero, Zapier, Zoom. So that is an example, and it's not exhaustive, but that's roughly how I would calculate those expenses. So because I'm on a monthly payment from my clients, it's really important to understand what that monthly commitment is. And this totals those expenses for the year. I have also separated out wages. So even though I get paid monthly, it's really important to understand the difference between monthly and weekly, because a lot of people get caught out by that. There's 52 weeks in the year, but there's only 12 months. So if you're working on that monthly thing and you've got a 5-week month, like, it gets tight. You don't realize that weekly to monthly has such a big impact. So it's really important to understand what your wages are. Now, in this case, I've just got $1,300 gross weekly, and it is also, by 11.5. And it's also got superannuation. So that's 11.5% of those wages. Now, if you're in business and you're not in a company or a trust, or not on wages or whatever that might be, this might be drawings. It really depends on your structure. It depends on your tax structure, and that's where you need to talk to your accountant as to how this works. But all in all, it all works as a generalized nature of numbers for you to understand it. It's just you really need to understand what your structure is and how that works for you, and whether you're on wages or drawings. So I've got an allocation for work cover in there. I've got an allocation for profit in there, just to set that aside. Now, this tax that I've got, it's calculating. So those highlighted ones are calculating. That is the GST, and I should write that properly, GST on income. So that's me factoring in the GST on the income. So this is a guide, really. Anyone who knows anything about their business activity statements and being registered for GST, a lot of this stuff up here you'd be able to claim GST on. But for the sake of this exercise, I really just generalize it, and I want to make sure that it's overestimated rather than underestimated, so that if anything, you're going to be better off. So I generally sit that separately. So that's the GST on the income. That's required to go to the tax office either quarterly or monthly, depending on what your situation is. If you're not registered for GST, that's also fine too. This is obviously going to be down under 75,000, and you just delete. We just delete the calculation. Obviously, if there's other considerations around income tax or company tax, that's where working with your tax accountant, and you would just add another line to this spreadsheet to make sure that you have an allocation. Now, the use of this spreadsheet, obviously, you need to have a bit of an idea about how to do spreadsheets. But that's okay. If you want to do something like this, we can always do it together. So this is an example of anything outside of the sort of day-to-day running expenses. This was an investment in a business coach. This was just allowing to put in a business loan repayment, which actually doesn't exist. It was just sitting there from a planning perspective, and also, like, say, for example, you'd want to put away savings. So this might be, you might be saving 3 months worth of expenses kind of thing in another account. So you might want to put away, let's just say $1,000 a month. Is that going to work? So the idea of this spreadsheet is income, you pop everything in. And like, I don't pop I pop facts in because you want it to be factual. If you're selling websites and you do one a month and it's a $5,000 build, obviously you go equals 5,000 a month, for example. If you do one a month, but you have 2 months off at Christmas, that's very different. So that's actually, at that point you're doing 5,000 for a website, say, by 10. So it's very different because the first option is obviously $60,000 a year and the second option is $50,000 a year. So that's nearly $1,000 a month over the course of a year that could create quite a bit of stress for you. So income goes in as close to accurate as possible. If you've got stretch goals or if you're trying to, grow your business or you've got, goals in there that you want to achieve, I pop them down in sort of the next line so I can easily take it out. So I'd be like, okay, so what would happen if I took a consulting gig once a week, for example? Straight away, it adds $14,000 a year. Now that's weekly, so that's every week of the year. That may not be the case. So I would tweak it accordingly. But once again, that's the goal. And that's me knowing that I'm adding $14,000 to that revenue for the year. So let's do some analysis. So obviously you've got all your income in, it's inclusive of GST. You've got all your expenses in, and it's really important that you put actuals, in my opinion. I'm not a fan of estimates because estimates get out of hand very quickly. So it totals down the side for you. So that totals the wages essentially. Now these categories, like I've said, if some people adopt a bucketing system, I have a bucketing system, so that's why I've separated them like that. And then we come down to the bottom. So let's quickly scooch up. That income with no extra movement in it, as in no extra stretch goals or anything like that. It's about $148,000 a year. So then when I come down to my expenses, my total estimated expenses are $146,000 a year. So that means I am $12,398. Okay. Sorry, I just need to adjust this. I don't think this is adding up, so let's just have a look. Oh, yes, okay. So when you divide that by 12, I'm approximately in front $163 a month. Now, that's not much. When you think about it, all it takes is one client not to pay, one expense to blow out, you have something untoward pop up. It's fine if you've got sort of a bank of money behind you that you can sort of take those swings and roundabouts. But I think it's really important to understand what those numbers are. So say I've decided to not do coaching, I don't have a business loan repayment, and I'm only putting $1,000 a month away for expenses. So that's removed any sort of discretionary spending. It's removed the estimate for the business loan repayment. That business loan repayment's a good line in the sense that if you were looking to buy a car and you wanted to estimate how much it's going to impact your bottom line. Now, bear in mind, none of this considers the claim of GST. It doesn't consider tax. It doesn't consider company tax or income tax or anything like that. It's purely a guide as an estimate for you to understand your numbers. So by me removing that discretionary spending with coaching program, business loan repayment, but leaving the saving of monthly expenses, theoretically, this spreadsheet is telling me that I have got $2,000 a month surplus. Now, ultimately, it's what you do with that and what decisions you make in relation to that. I see often that, people get caught in the trap of like building a website, for example. You can do it really low cost, do it yourself, or you can invest in $5,000 or $10,000. So the important thing about it is if you say you really want to invest in a website or a big build or more stock, even if you're a stock-based business, this is really service-based. But, that's telling you what you've got monthly. Now, that's not in the bank. That's only if all things comes to fruition. It's giving you a guide. The other thing to understand is it's also a good guide for, say, for example, you've got a whole bunch of people. You might be a VA firm and you've got a whole bunch of people on fixed price agreements in your virtual assistant firm. If you lose a big client, lose a chunky client, if you can afford to sort of wear that through that period, they might be only small, so it might not be a big risk. It might open you up for some time and you might actually be able to replace them with a more profitable client. But it's also, allowing you to understand month in, month out, if you need to hustle for a few more agreements, if you need to hustle for some more work, or if you need to really dig down on your expenses. So the last part of this spreadsheet, which doesn't apply to everyone, but it may apply to some, this is the total for the year. As discussed, you can see that that's got the 123,000 expenses and it's got the surplus and deficit for the year. Now, this is if you want to work 52 weeks of the year. Like, let's be fair. Business owners do work a lot. However, there is public holidays. There's times that you don't work. So if you're not on sort of contract-based works where you're locked in a contract monthly, and you do have periods where you don't work, so your revenue is lower, I think it's really important to understand that, say you want to work 48 weeks of the year, that changes that same yearly total, right? So you want to chase that over, let's say, 48 weeks. That means monthly, rather than your average being, around that 12,000, you really probably need to chase that 13,000, because there's going to be a time where you don't have that revenue. So in a perfect world, say for example, you started this spreadsheet on the 1st of January, and you were going to have the following January off, you'd be saving, essentially, you'd want to be over and above your budget every month. Let's just say this is looking like $1,000. So what it's doing is you're earning more than what you're spending month in, month out for 12 months. In theory, all going well, and you haven't been spending, you've got that $12,000 in your bank at the end of December, which allows you to take the next January off. That's a really simplistic way to explain it. But if you need to drill that down into weeks, like say you're replacing your salary and wage because you've jumped ship and you need to know what you want to earn, what you need to earn week in, week out. If you do have that sort of consulting business, you can drill it down to weekly. Like that might be a better number for you. Not all businesses work in monthly. Some work in weekly. Like you might have weekly commitments that you can invoice weekly and that turnover. So if you drop that down and say you really want to only work 40 weeks a year, that takes that weekly commitment average of 52 weeks from 2,800 to only working 40 weeks. So when you're working, you need to be working and getting 3,700. So it's just allowing you to tweak those figures and really understand what's right for you. Now, this is a guide. These aren't accurate figures for anyone. They are only to be used as a guide, and it doesn't take into consideration any sort of tax, accounting, structure advice. It is literally just, hey, I'm earning over $75,000. This is what I'm earning. This is what my GST would be. This is all what my expenses would be. and it allows you to make those decisions. The final note is if you have been side hustling for many, many years and you want to get yourself up to a living wage. I say this because a lot of people in business don't pay themselves first, and they don't pay themselves what would be a market salary. So I'm going to change this back to 52 weeks and say, for example, I'm just going to move this. So I'm going to copy it. So this is a basic spreadsheeting calculation. Let's just say I've changed my mind. I want 75,000 a year. Oh, that's too much. That's also too much. That would be nice. So I want $70,000 a year. That's 81. Oh, I can't add up. So that would mean at this point, if I decided to increase my wage of what these figures were. So let's just remember I went from, I'm just going to take these out. So I went from $1,300 a week. Just going to get that. Equals that 5.15. So I went from $1,300 a week, which was $67,000 a year, and I really want to get it up to that market salary of $75,000 a year. That allows me to look at if that revenue that's coming in allows me to afford that. Say I want to put on a staff member, my first staff member, VA even, so a virtual assistant. So if we just said, okay, they're not going to be on wages, it's an external contractor because it's an agency, I'd be like, okay, I'm on $75,000 a year. I've still got $1,400 a month spare. And let's just say the virtual assistant's going to cost me $215 a week. That drops my monthly, overs and unders down to $500. So it just allows me it allows you to make decisions before they happen. Now, my final note is this has got nothing to do with mindset, nothing to do with stretch goals. This is purely factual information and it's a guide. So it's not meant to be limiting, but I think there's real power in understanding the bare minimum that you need a month, because understanding it is really important. So when I say bare minimum, it's not a place that everyone likes to live, but it's a place that you might want to know about. So if you've got to hustle, if you've got to find more clients, what gap you're bridging. Like say you might have, 6 months worth of expenses because you've just cashed out your long service leave and decided to work for yourself. If this was in, let's just say I was in startup, and I dropped that down, which is very good. Like that's very good. But like all of a sudden I'm in deficit, right? So like I've got to find that money from somewhere. The business needs that money to be injected into it. So it's like, okay, let's just say I'm willing to put $10,000 into this business to keep it going for a period of time. A lot of people do. That's how a lot of people start business. So essentially, generally speaking, I've probably got 4 months until I need to make some drastic changes. So it's allowing you to make those decisions well in advance. Now it is, and I've got so many disclaimers in this video, and for that I must apologize, but I have to say to you, this is not a perfect world. This is based on looking at a 12-month period. It's not based on looking at any particular 12-month period. It is just a 12-month period and looking at all your expenses and all your income to try and ascertain for you whether it's what your targets that are weekly, fortnightly, monthly, or yearly, and what you need to turn over in your business to get your business to be what you want it to be. Because at the end of the day, we go into business for the challenge and to make money and to change people's lives. So this is purely a tool for you to use to make those decisions. Now, if you would really love to do this together, because this is my jam, I love this stuff. If you want to sit down and do this together, you by all means, go to my website, www.keepingbalance.com.au. You will find a Know Your Numbers booking link there, and we can sit down and do this together. And the beauty of that session is you get this. You get this spreadsheet at the end of the session that we have done together. So we can talk through it. We can talk about what you've got. You can look at your bank account. If you're new, we can do estimates. So by all means, if you want a bit of support, we can book a session together. Alternatively, if you're a gun at Excel, go for it. There's plenty of templates out there, and I encourage you to know your numbers, because not knowing your numbers can be a very confronting place in business, but it's also very powerful for you to know your numbers so that you can make the business decisions that suit you. Thank you for your time.